Good evening, ladies and gentlemen. Today is the 16th of Feb, and it was a very interesting day. Yesterday, US markets closed at their highest point, and this morning futures were up by more than 0.5%. So everything seemed to be a consensus buy, and that is exactly when you see profit booking. So from a trade management perspective, today we had a strangle that we managed through the entire day. Didn't go so well for us because of IV expansion within weekly options, and eventually we decided to exit the trade quite early because we were starting to get a little frustrated managing it. That being said, I still hope you have some good takeaways from today's video, and any feedback that you do have, please do let us know in the comments. Thank you. Good morning, ladies and gentlemen. So today we're looking to gap up better than expected, and being led by IT, and private banks continue to look very good. Overall, the broad market, everything opening slightly in the green. So the idea will be even global cues. Last night US futures ended at their high. US markets closed at their highs. Now US futures are trading at their highs. So the idea is we will create a 300-point strangle with a slightly bullish view and manage it through the day. Yesterday there was IV expansion in current week options, so a little bit of that may decay during the day today. So the idea will be to capture some of that. So yeah, 1 minute till market opens. We'll see what exactly happens post gap up and then enter our trade. Okay, so we have entered our position for the day. The idea is that we will continue to remain bullish to sideways, and our strangle is currently quite neutral to play that we've already had a gap up. So we'll see what happens around 15,400, and then we will potentially move up our puts if the upside momentum continues. The reason this is not equidistantly spaced, this is 150 points out of the money and this is 200 points out of the money, is that after such a big gap up, any down move could see these puts inflating rapidly, whereas these calls will not inflate as rapidly as these puts will. So that being said, our position has been entered. It is 9:20, and I will keep you posted. Okay, it's 9:25, and we are consistently holding above 15,400. So what we're going to do now is move up our puts to 15,250. Okay, we moved up part of our position, and for the rest of it we'll just let it be as it is. We moved up about 60% of our position, so this should be alright for now. We will wait and see what happens around 15,400 for a little longer, and then move the rest of it. Okay, so same story as yesterday with respect to what's happening with IV expansion of weekly options, but we gapped up, continued to go higher, and so at entry our put was trading higher, and then we moved up to a put that's still trading higher than the call that we sold. But what happened is, due to IV expansion, these calls go up in price, but these puts don't decay a single point. And in fact, they start inflating on reversal. So that being said, today is a Tuesday, and there's only 2 more days after today for these options to expire. So it cannot be that these options do not decay at all. So what will happen is, this is currently worth about let's say 75 points. Then this is a 300-point strangle. This has to decay by at least 25 to 30 points by tomorrow morning. So that being said, a lot of that has to get incorporated into today, especially considering that we did not see much decay yesterday. And so all that being said, right now Kotak Bank, HDFC Bank, HDFC, Reliance, Larsen, they're all looking really strong. There's nothing that is particularly weak. There are slight dips in ICICI Bank, Bajaj Finance here and there, but nothing that looks weak. So the market looks extremely strong above 15,400, and we don't want to move up our puts further than 15,250, not yet, not unless we start seeing that we're breaking past 15,450. So that being said, this has to start decaying now. Yesterday being a Monday, completely acceptable that it doesn't decay, but we can expect a good amount of decay to happen today. So for now we're holding this position, which is quite well balanced, and the damage that we're taking is purely due to IV inflation, because we gap up and we continue to go higher. Nobody knows. We're at an all-time high. How much higher do we go from here? Do we close at 15,500? Do we close at 15,600? So that's why these will really inflate. At the same time, we don't want to take on too much risk on the put side, so we continue to hold this exact position, and the time is 9:40. Okay, so it's 9:50, and I want to quickly just go over what this IV expansion or particular strike is. So I'm not sure how thorough job I'll do of this, but basically when we gap up, we continue to go higher, continue to go higher, continue to go higher. These calls expand all the way till like 40, and that's because nobody knows. People are like, okay, it's going higher, everything is positive, it's going to higher. Everyone's buying, and the guy who is sold is buying back, saying, okay, I don't want to take any more risk. So the seller also is feeling a high sense of risk, the buyer also is feeling a high sense of reward. They're going through the roof. Whereas the guy who sold the put is like, I'm not willing to sell cheaper than this. Like, you take it or leave it at this particular price. And the buyer is also like, okay, everyone's creating long positions. If all their stop losses hit, there's a potential that it comes cascading down. So this put is still worth paying the same price for. That is the psychology. There are people who are buying the call side feel that the reward is much higher. People feel much higher risk. So that's why the call is expanding. Whereas the put guys are like, no boss, we're staying right where we are. We're not paying more and we're not selling for less. So that being the idea. If we aggressively move up our puts here, saying that it's going to continue to move higher, then our position becomes completely imbalanced. And the slight sign of a reversal, you'll see these puts expand rapidly. When we know that our call currently is hedged from the put side, then we don't need to use in that IV spike try to do any kinds of immediate adjustments, especially if there is no real criteria to do it. So the rule was, if we break and hold above 15,450, then we will move up our puts. Until then, no need to. Don't get caught in that IV expansion. Now that we see this reversal, you see the puts are not going up in price. In the reversal, the puts are not going up in price, but the calls are coming back to us, because all the guys who got excited that yes, it's going to go another 100 points, it's already gapped up more than 0.5%, and now it's going to continue to move higher. Those guys are quickly exiting their positions. So that being said, we are neutral, and we have a slightly bullish view, and we are neutral, and we will continue to hold for whatever decay we can capture. So time is 9:50, and I will keep you updated. Just like that, this candle is all it takes to deflate the puts by the calls by 12-13 points, and the puts have gone up by 2 points. So that's when the market is realizing, okay, there might not be that much more upside. When we opened, it looked like the sky could be the roof, but now that we saw that, okay, it got sold into even slightly, it just got sold into slightly, but that's good enough for them to say, okay, we'll probably start hovering around 15,400 plus minus now. So everyone's come back down to earth. Okay, we're testing the opening lows now. So for risk management, we're going to move down our calls. This will once again put us in a balanced-ish spot, which is where we want to be. So I'm going to move down about 60%. So we're going to just move down all of it. So the idea is we don't want to take too much risk on the downside. If the day's low breaks, we're testing the day's low and trading below 15,400. So yeah, we are now premium wise balanced on the Strangle, and we're just going to hold this position now.
So this is what it looks like. Okay, so Bank Nifty is heading up, Reliance is heading up. Reliance volumes are not good enough for this breakout situation to happen. So to break here, we'll need these kind of volumes, not these kind of volumes. So Reliance at today's high might continue to stay here. Axis seems to have bottomed out after the profit booking and now is heading back higher. ICICI Bank is still quite stable after the dip. So what we're going to do now is move up the ports. About 50% of them we will move them up, and we'll wait for 15,400 to hold. So this is the first candle above 15,400. We're going to wait for two more to be formed. Once those two are formed, we will then move up our ports. So the time is 10:40. Okay, we're moving up our ports now, and once again we will be perfectly balanced. The reason we're doing this is Bank Nifty might have bottomed out for the day, and we don't want to have what will effectively be a bearish position if we hold on to this. So okay, so now once again our Strangle is neutral, and what's happening? Reliance continues to trade at today's high, but to break out, it needs to be able to absorb a lot more of the selling volume. Also, the main reason we moved up our ports is because Bank Nifty might have made a bottom for the day here. That was the idea. Because the biggest draggers of Bank Nifty, which is ICICI Bank, might have fallen after the up move. Profit booking is natural and could have bottomed out here. Same goes with Axis Bank, which is now heading up higher. So Bank Nifty sell off, profit booking, and now heading back higher. So these two places could act as bottoms, which is why we have moved up our ports. So now our position being quite well balanced. So the thing is, we're always just trying to capture the intraday decay that's happening. We are not trying to get overly aggressive with our position when our view is not overly aggressive. Yes, it is a positive view, but yes, we have gapped up and we moved up almost 300 points in the past two trading days. So that being the case, we don't want to have an overly bullish view and expose ourselves to the potential reversal risk, which is why we're quite balanced. So I'll keep you posted. The time is 10:50. Okay, the time is 11:05 and our Strangle is quite well balanced. The idea from here and the trade plan from here is very simple. We're tracking all the different scripts, and Reliance is now heading towards a new high, which is what is pulling up the Nifty as well. This down move came because of Bank Nifty, and this up move is coming because of Reliance now, among other stocks. So the trade plan for now is if we take out the day's high, then we will move up our puts 50% to begin with, and then the whole position. And if we take out the day's low, then we'll move down our calls once again 50% to begin with, and then the rest of them. And that's the idea. So if you're noticing a pattern on a daily basis, what we're doing is we start out with the Strangle that's quite far away, and then we keep coming inside towards the spot and trying to collect more credit. So our reward also goes up, and at the same time we're balancing the risk on each of our losing legs at any point of time. So the time right now is 11:06, and I'll keep you posted. Okay, so IT is causing a dip, and that's mainly coming from Infi, which has now come to a very psychological level of this 1300. So I'll have to see what happens to Infi here, if it bounces back, if it stays here, or if it breaks down from here. Banks as well after that attempted up move have now gone back around the day's lows, and Kotak Bank is looking extremely strong, but ICICI and Axis not so much. So that being the case, once again on Nifty we tested the open, and there seems to be a little bit of demand here. So we continue to hold the same position, which is a 200-point strangle, and see what happens from here. So what's happening now is, despite this down move, the put value isn't really rocketing, and the call value isn't coming down either. So that being the case, the market still feels that the put is not worth too much more. The demand for the put is not going up, if you see. So that being the case, we're just going to hold this position until we start breaking 15,350 on the downside. That's the plan. Okay, so we're seeing big dips, and we're keeping a little room for potentially this dip getting bought. Now we are back to yesterday's close. So yesterday's close in this range should act as some kind of support. So keeping that in mind, we have now shifted down our calls. We shifted down our calls, we kept shifting down our calls. And now our calls are here to a point where our strangle is now balanced. Now we're seeing these puts deflate rapidly and these calls starting to inflate, but it is still quite well balanced. Okay. The thing is, there isn't enough momentum for us to go short here. So that's why we're not going short. See, a dip is never a concern. This dip is never a concern. What is leading to that dip is more of a concern. So if you go through all the different scripts, is there anything that is completely breaking down? I mean, after the up moves, banks getting profit booked is completely natural, but ICICI Bank once again should have a support zone in this range. You see where all this cluster is. This doesn't necessarily cascade right there. There are a lot of buying selling action that happened here, which will come into play. So is there anything that really should indicate downward spiral momentum at this point of time? KH, you are looking quite weak from this support zone here, breaking down potentially. This TCS and Infi have been weak for the past few days, but still the psychological support zone on Infi holds 1300. So for now we are not doing much to our position, we're just holding it as it is. It's quite well balanced in itself. It's more aggressive on the call side. So there's no reason to think of too much of a pullback either, but there has been good amount of put writing at 15,400 today, a larger amount of call writing. So that being the case, right now we are going to hold on to our position exactly as it is, and then if we start heading back towards 15,400, we will move up the puts further, and we'll eventually reach a strangle position today, it looks like, but that's the idea. Okay, so we've moved up our puts also. Because we're seeing a pullback towards 15,400. Now, one more step and we'll be in a short straddle position. Basically, if we start heading back up to 15,400, we'll have a short straddle at 15,400. And if we start breaking down below 15,350, then we'll have a short straddle at 15,350. Once we're at a short straddle position, the closer we get, the lesser active management we'll have to do in itself, because the trade will continue to neutralize itself in that period. So, that being said, we're seeing a pullback on the Nifty towards 15,400. We're just going to hold this position for now. Let's just take a look at market positioning. Currently, the spot is 5 points below 15,350. The 15,350 put is trading for 86.87. The 15,350 call is trading for 97, which is a huge difference. It's a 12% difference. So, that being said, the market is definitely positioned for a dip like this to eventually get bought. So, that being the case, we're not being too hasty with our position, but if we hold here, then we'll be rolling down our calls to 15,350. Okay, the time is 12:50, and we saw this dip where Bank Nifty basically touched 37,000, but is holding above 37,000. And our position is looking like this now. We have a short straddle at 15,350. We had to move down on calls, even with the logic that this dip will get bought. If once these puts start expanding, you have to absolutely move down the calls, because otherwise there is too much downside risk. One of a few things can happen at a point like that. If you're in a position and you feel like you're not able to manage it, get out of the position. Like, book the loss, because loss booked is prevention of further loss. And if you're not able to manage it, that's the best case scenario. Now, that being said, it's sometimes easier said than done to try and be disciplined about how you manage your trade. Whenever you feel like you're deviating from that, you have to get out. So for now, this position is good. Now it will balance itself quite nicely once it's here. So we're not seeing too much downside. Bank Nifty holding on to 37,000 is a very strong sign from the market that not too much downside on the banks, at least as of yet. Reliance doesn't have enough volumes to break out, so if it has to break out from here, it will require considerably more volume, something like this, for that to actually happen convincingly and move upward. So, not too much strength coming in from Reliance, so not too much strength overall. But for now, our short straddle is just about 35 points higher than what the spot is. Now we might start looking to go inverted and move our calls to 15,300 if we see that 15,300 starts getting broken on Nifty. So that's the plan for now. Okay, so it is 1:15 and we have exit everything. We're going to exit the hedges as well, because the market is now very uncontrollable. Taken out all of yesterday's range, and now very unpredictable what happens. Bank Nifty as well fallen below 37,000. So happens, and can't really do too much about it. These kind of days happen. So you just if you're starting to get frustrated with managing it, you just get out of the trade and you wait for the next day. Thank you so much for watching.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.